Hi, this is Diana Chan from Chan CPA Company. Welcome to our webinar. We're talking today about the PPP Loan Forgiveness Application Program. And we're going to be talking today on focusing on the understanding of the basics of the PPP loan forgiveness requirements. Now, on June 5th, which was a really important date, the Paycheck Protection Program Flexibility Act was signed into law by the President, which modified the PPP program and some of the forgiveness requirements. And we'll be discussing that. This presentation has been updated based upon our current understanding of the new requirements. However, I will definitely tell you, this has been a fluid situation, and some of these informations that we will be sharing with you may have possibilities of changing, and the SBA is starting to interpret the new laws to make their own determinations. And as these regulations and new concepts come out, we will continue to keep you updated. Now, the SBA just revised instructions for the forgiveness application yesterday, which was June 16th. And of course, we will continue to keep you advised. What we're going to talk about right now is what is the overview for the forgiveness application process. So who is going to have to complete this forgiveness application? You as the borrower. To whom are you going to submit this application to? You will be submitting it to your lender. Now, it could be submitted through hard copy or through the lender's online portal. And it will be dependent on the lender to make that decision for you. SBA has actually provided specific application forms that will need to be completed. However, as was in the application for loan process, the lenders also may provide an online portal to allow you to upload this information to make it as simplistic as possible for you. When is this application for forgiveness due? It's going to be due within 10 months of the last day of the forgiveness period, of the forgiveness covered period. And so that's going to be really important for you to know. The borrower, by the way, must retain all paperwork regarding their forgiveness for at least 6 years, no different than a tax return, and must be made available for the SBA to review at any time, just as with your tax audits. So you can consider this, the forms, as we have considered it. Preparation of these forms and application is no different than preparation for a tax return. So what we wanted to go over right now is what the PPP loan forgiveness application process is going to look like. And I thought it would be best to sort of put it into a flow chart. Number one, first the borrower will submit the loan forgiveness application. Now, this could be that we will help you with that application format, or it could be that someone in your organization would help to complete this forgiveness application. Number two, the lender has 60 days to make the initial level decision. If the lender approves the initial level decision, and indicates that it is entitled for forgiveness, it will send it to the SBA to review and decide within 90 days. And by it, I mean the application form. Thus, it will go through the approval level, and the SBA will then pay off the approved amount of the loan to the lender. However, if the lender within that 60-day period from the initial level decides not to forgive the loan, you have at that time 30 days to appeal this decision to the SBA directly. And what is also important is if the SBA, after reviewing the initial level of decision by the lender, after reviewing the supporting docs, decides that it is not going to approve the loan, the borrower still has 30 days to review the lender's decision. Again, you can definitely appeal that decision. and I'm sorry, the borrower is then going to be responsible for the loan if the SBA decides not to approve the loan or the lender decides not to approve the loan. But again, you have 30 days to appeal that decision. And remember that this loan is at a discounted rate. So the good news is, even if the loan is not approved, you will be paying a 1% interest rate on this loan for either a 2-year period of time or a 5-year period of time. Now, let me talk about this because a lot of folks are confused about the forgiveness covered period. And by the way, this did happen with the June 5th Protection Program Flexibility Act, where they modified the forgiveness covered period. Going forward now, because of the June 5th law signed into law by the president, the covered period is now the earlier of 24 weeks or December 31st, 2020. And that's very critical for you to understand. It's 24 weeks, the earlier of 24 weeks or December 31st, 2020. However, for those loans that were provided prior to June 5th, you as the borrower have the election to make it for the 8-week period of time versus the 24-week period of time. But that is going to require an election on your part. So that is really important. I can't really think of many clients that may want to utilize the 8-week period versus the 24-week period, but there may be some, and we certainly can assist you in making that decision with you. There's another thing that is of importance that you'll need to know, because many clients have asked us, okay, so what happens if my payroll is off cycle prior to me receiving or right after I received the loan, then I had a payroll the week before. So they gave us an option to do what we call an alternative payroll covered period. And this only is in effect for the payrolls for biweekly or weekly coverage. So it's only going to affect you to choose an alternative covered period if you had biweekly or weekly payrolls. Now, please note that this is really important because it only affects payroll, that you can utilize the payroll biweekly period as the beginning of your start date for the loan. And then you can continue forward for that 24-week period of time. Now, what we're going to be talking about is what costs can be forgiven. So this is really important because a lot of clients are asking, golly geez, I had a loan amount of this amount of say $100,000 and I'm not able to utilize payroll cost of 75%. This is another thing that got changed on June 5th, which is great. Now the eligible payroll cost is a minimum of 60%. It went down. What this means is paid and incurred during the 24-week covered period or the alternative payroll covered period. Excuse me. Paid means the day the paychecks were distributed and the borrower originates the ACH transaction. Incurred means that it's the day the employee's pay is earned. Now that's really critical because I know a lot of you have asked, well, there's back pay. You can't really do anything with the back pay. You can certainly provide combat pay, hazard pay, bonus pay based upon actual specifics of your company, but you can't use it for back pay, and I think that's very critical. Also, another criteria that is of really large importance, and it was just issued yesterday and from the SBA as well, the maximum compensation of $100,000. We've gone through this before where The weekly amount is $1,953 a week. And when we determined it initially on the 8-week period of time, it was 8 times that amount, which is equal to $15,385. Now, the great news is if it's for a 24-week period, the maximum for any employee besides owners, and this is really important, besides owners of companies, the maximum would be $46,154, which is 24 weeks times $1,953 or thereabouts. Additionally, besides cash compensation for payroll costs, there's also what we call non-cash compensation. That's going to include employee health insurance, contributions to retirement plans, and also the employee state and local taxes. So that's really critical for the 60% minimum amount. But there's another caveat that I think is really important for you to understand. When in your entity you have owners, employees, and this also is respective to Schedule C filers and general partners. In general, the maximum payroll cost compensation will be based upon 2019's compensation. An example of what that might look like is if you earned last year $80,000 for 2019 as an owner employee, and you earned or you anticipated earning $100,000 in 2020, it's going to reflect back on the 2019 number, and you will be capped with your $80,000 amount. The other criteria that is going to be very important is that there's a max limit capped to $20,833 for any owner employee, any Schedule C filers, and any general partners. So that's of importance as well. So I think we all need to understand that. What additional costs can be forgiven? This is the remaining 60% minus 100% is 40%. So now they changed the non-payroll cost from 25% to 40%, where the maximum amount could be 40%. So this is going to include business finance interest payments on real or personal property. That could be if you owned a building, the interest amount of that building that you paid would be included in this maximum amount of 40% for a 24-week period of time. Also, it could include equipment purchases, the finance interest on the equipment purchases, or the vehicles that were included as entity vehicles. So there is a real importance in that, and they're going to gauge it for this interest amount prior to February 15, 2020. And what that means is they don't want you to make it up or buy it during the time that you received the loan. It had to have happened and had to have been incurred prior to February 15, 2020. Again, business rent or lease payments on real or personal properties as well, and also business utility payments. And so that is going to include an electricity, gas, water, telephone, and internet. Now, we also included transportation here, but that's only in regards as it relates to acquiring the electricity, gas, or water. These things are to be included in the maximum amount of the 40%, and please make sure to note they must be either paid during the normal covered period or incurred during the covered period and paid on or before the regular billing cycle, even if the billing date is after the covered period. So that's really important. All right, so here we go. So what may reduce the forgiveness amounts? Well, the very first thing is what can reduce the forgiveness amounts? You know, how we need to help you tax plan for this, because if by chance you received $100,000 and you didn't meet the 60% payroll cost, that then would reduce the forgiveness amount, and it would be converted into a loan. So if to the extent that you have not enough in forgiveness amount, please still remember, don't fret. It still is a loan. It's a business loan, and it's a pretty decent, reasonable interest rate at 1% with a 2-year or 5-year period of time for payment. Number 2, if you don't meet the 60% of funds not used for payroll criteria, then number 2, if your situation is that your employee headcount is not equal to or equivalent to the most current during the covered period. And there are 2 different date criteria of which we've showed you here. So essentially, this could be a situation, an example could be a situation where you might be a restaurant, and prior to February 15th of 2020, you had over 40 employees employed. And now, starting when you received the covered period of the loan, you received your monies, you were not able to even open your business except for takeout. So you certainly did not need all of those employees. So that employee headcount is going to go down. That is why that criteria might be met and your forgiveness amount might not be as large as you would want it to be. But not to fear, there are exemptions and safe harbors of which we might be able to help you get out of that situation. And I give you a list of who and what you might be able to do in order to get through those exemptions and those safe harbors. I just wanted to say, Chan CPA is here to help in the following ways. We can help in election of the covered period, 8 weeks, or continue to stay with the 24-week period of time. We can help with the preparation of the loan forgiveness application. We can help in regards to tax planning strategies and loan forgiveness application timing, because of the fact that it is 10 months before you have to complete the loan application, it might straddle different years. And so it'll be really important to decide that, because there will be a revenue recognition component. And also, we can assist in possible taxable income straddling between 2020 and 2021. So please reach out to us. Let us know if you have any questions. And if you have specific questions, we'll be happy to send you via email or teleconference what our answers are. If you have some general questions, we're certainly open up to the Q&A session now. Thank you so much, and we look forward to seeing you at our next webinar. Take care, have a healthy and safe day.